Good evening, traders. It is September 9th, Wednesday evening, and that must mean that it is time for the weekly swing trading video. It's funny, just a week ago, we had a new all-time high in the market right here on September 2nd, and I told all of you the market is getting ready to correct. We have an overextension here. We're above this upward sloping trend line. Typically, these moves come in the next 5 days or so. So we were prepared for this drop that we've had in the last week. In fact, from the time that we broke out through this SPY 338 level, that was the high in February, I suspected that the move was getting a bit overextended. We have run so hard and so far since March that prices were starting to get way ahead of themselves. The forward PE right now in the S&P 500 is about 23 by any historical measure. Super rich. So we needed to be careful. We saw some profit taking. This started last Thursday. So if we would have been trying to get filled on any of our credit spreads last week, we would have had absolutely no problem getting filled, and then we would have been doing some hand wringing. Got a lot to cover, so I'm not going to go over the fundamentals or the technicals of the market too much. You can read my market comments before the open. I do want to state that if you're watching this on YouTube, you're seeing it 2 days after members see it. I release it to them Wednesday night. I post it publicly on YouTube Saturday morning. That doesn't mean that these trades are old and stale. Still a lot of great educational content in here, and a lot of those trades are still valid. So if you can get in those spreads, it's worth trying to get them off. So let's take a look at the technicals. We've had this big breakdown below this upward sloping trend line. We are above the high from February, which is that 338.60 level, and we had a nice close to the market. Typically, the way that these sell-offs go, you can get a sell-off and a very brief bounce that might only last a couple of bars and then another huge leg down. I don't see that happening. I would only put that probability at maybe 20%. There isn't any dire news. So nothing has changed dramatically. If the unemployment numbers were horrible and we started to see an economic slowdown and the coronavirus were still nagging us, I would say that might be possible. That's not the case right now. I believe a more likely scenario is that we get a bounce. So what happens after the bounce is very important also. One scenario is that we get the bounce, a really small pullback, and then we shoot for that high. I also don't believe that that is going to happen with the election coming up. There are a lot of other smaller issues that I think are going to weigh on the market. I don't think that's a very likely scenario. Here is what I believe will happen. It's going to be similar to this pattern right here that we had earlier this summer. You can see that upward sloping trend line that was breached to the upside, overextension, market corrected, spent a few days selling off, buyers got a little bit of confidence, they came in, sellers returned and tested that bid. So you've got 2 lines of support, downward sloping trend line, breakout to the upside. This is the sweet spot. And you can see that coincided with the 200-day moving average. I don't think we're going to come all the way down to the 100-day moving average. I would think would be the first target. I think that we find support probably in that 322 level right in here. That prior high I think will be support if the market did come in. But buyers seem pretty dang aggressive, especially during this stretch. They didn't care that the market was overvalued. They were more interested in us getting past the coronavirus, in vaccines that are being developed, in the economy starting to strengthen, in the $6 trillion of stimulus that's out there. There's no yield on bonds right now. They aren't keeping pace with inflation, so equities are the only place to be. You've got to park your money in equities right now. That's the mentality that they're operating under. So I think that with every passing day, we'll see the bid strengthen. We'll see another test of that low. And that will be the one that we can really sink our teeth into. Now, this process may take 4 weeks. So what we're going to be doing tonight, I've got 3 bullish put spreads that we're going to be trying to put on. First, I want to take a look at our current positions, and let's see where those are at. So we had to do a little bit of adjustment in the last week, and I'm glad we did. You saw that alert that I sent out last week, Thursday evening, after the big market drop. I said, buy that Microsoft September 11, 212.50, 210 bullish put spread back at the market on the open Friday morning. I suspected that we'd get a little bit of a market bounce after a deep sell-off on Thursday. We got that. Microsoft rallied with it. We were able to buy this spread back. People in the chat room were posting that they were getting out somewhere around 85 cents. I saw 80 cents. I saw 90 cents. I figure 85 cents was a pretty nice uh, average of what I saw posted there. So at 85 cents, we put the spread on for 50 cents, bought it back for 85 cents. That is a 35-cent loss. And we had to put up $2 in margin to put that spread on. So that was a loss of 17.5%. So we also had an Amazon spread that expired last Friday. And I got to tell you, it was 100 points, I think 70 points out of the money on Friday. I was getting a little bit nervous about it. Going into the day, I believe we had about 300 points worth of cushion. That just goes to show you how quickly market conditions can change. And instead of having a basket full of positions on that we had to babysit, instead of having to adjust all these different positions, we had very wisely pared back our exposure and we didn't have to deal with that. We've got some nice trades on right now. So Amazon, we were able to get a $1 credit for that. It expired worthless and we had to put up $4 in margin. So we made a 25% return on that. Here's how I view the last week. We dodged a bullet. We lost a little bit of money on Microsoft, but we made more money on Amazon than we lost on Microsoft. So, all things told, we're on the plus side. Now we've got another wrinkle to deal with. We had Astrazeneca came out and they had to stop their vaccine trial for the coronavirus. They had a patient who got sick. They don't know if it's because of the vaccine or if it's because of something else. So the stock did pull back today. Everything was going fine with it. We are going to reel this spread back in. There's no reason for us to take this kind of risk right now. And that spread marked at 55 cents, I think we're going to be able to buy it in for 50 cents tomorrow. That's what we put it on for. It's a scratch. No harm, no foul. We had a big market drop and we're unscathed. The rest of our positions actually look quite good. And you can see, I'm not going to go through the charts of all of these, but you can see that the Dell spread, 17 cents bid, offered at 50 cents. We put it on for 45. That's working our way. Alibaba, the 65, 62.50 bullish put spread that expires this Friday is way out of the money. Even though it traded 7 cents, or it was marked 7 cents bid, offered at 132, we put it on for 50 cents. So we've only got 2 more days left in this one. That's going to be a winner for us. Zillow, we're short the 74, 73 put spread for 20 cents. That should be another 25% winner for us. Then the only other remaining trade after that is we've got TMUS, T-Mobile. We're short the 110s, long to 105. So very quickly, let's take a quick look at those charts, see where those are at. So Dell, our short strike price is 62.50, and that's way down here. You can see that the stock is up at about 66.80. So lots of breathing room on that one. We do have to get through September 18th on that one. BABA. There you can see that stock is at $273 and we are short the 265 puts. So we've got about $7, $8 worth of cushion on that one. We're leaning on this horizontal breakout right here. That one should expire worthless. Especially with the nice market bounce that we got today. I'm expecting the market to start off on a good note tomorrow. Even if it gives a little bit of its gains back between now and Friday, I really think we're going to be in decent shape on that one. There we're short the options that expire this Friday, the $74 puts. You can see we're at $82 on the stock, $74 all the way back down here. We are in really nice shape. Even during the market sell-off, the stock didn't get that low. So that's another nice one. TMUS is a really boring stock, and that's one of the reasons that we picked this one. 113.20 is where the stock closed today, and we were short the 110, 105 bullish put spread. So you can see 110 is all the way down here. The stock never got that low, even during the big market drop yesterday. So, yes, Microsoft and Amazon, they were roughly a scratch. AZN is going to be roughly a scratch, but we still had 1, 2, 3, 4 really decent bullish put spreads that we were able to put on, each generating in the neighborhood of a 25% return. And that was with a big market decline. So we were able to shoulder that move. And as a trader, I'll tell you this. When you're able to shoulder these big moves and avoid this kind of trap, that type of risk, this type of risk, it bodes well for what's to come. And the reason for that is that now we have new information. Now we can gauge the selling pressure. We can gauge the buying pressure. We can identify support levels. I will tell you, when I did this video a week ago, I had a very, very hard time finding any trades. I was seeing stocks go parabolic. There was no way in my right mind that I wanted to do any kind of trading. I knew that we had to have that washout. We had to have that pullback. Now, when I look for opportunities tonight, oh my gosh, they're everywhere. I had to really temper my enthusiasm because I saw a lot of decent positions that we could put on. However, market first, market first, market first. You hear me preach that all the time. Right now, the market still has some unfinished business. Could we bounce the next couple of days? Yes. Are we likely to test this low again? Yes. Could some of the stocks that have already shown some cracks fall further? Even some of the tech leaders that we've seen? Absolutely. So, this is still not a time to get super aggressive. The spreads that I'm going to show you, we're going to try and get these spreads off between now and the close Friday. If we don't get filled, cancel the order. We don't want to get filled after Friday because we want to be able to continually evaluate market conditions. So if I had to give you probabilities, 70% chance that we will bounce, but what happens after the bounce, that's going to be the critical part. Now, I will tell you that if this bounce takes a nice long time to develop, that would be good. Nice, gradual, spends a lot of time. That would mean that the pullback is probably going to be pretty gradual too, and we should see support above that support level right there. So I would like another 4 or 5 days of rally and then another 5 to 10 days of selling off and testing that support level. That would make me feel really confident that this support level right here, or roughly 332 on the SPY, is going to hold. What we would not want to see is a very sharp, quick bounce and an instant test of this low, because if that happens, there's a good chance we'll break below it. If we do break below it, then the 100-day moving average comes into play. Worst case, probably 224 comes into play on SPY. We don't know what's going to happen, so we're going to find the best of the best. That's the other thing that these market drops do for us. They allow us to evaluate relative strength. There were a lot of stocks that were fakers in here. They were just rising with the market momentum, and investors were just chasing these stocks higher and higher. When you get this crack like that, then the real deal, the best stocks, they hold their bid extremely well, and we're able to uncover that using some of the searches in Option Stalker. So let's take a look at some trades that I've got for you this week. All told, our current positions are in really nice shape. We are going to buy the AZN put spread back on the open Thursday morning, and 50-cent debit is our limit. We're not paying more than that. We're going to try and reel it in. If we don't get filled Thursday, we're also going to try and get filled on it Friday. They said that the results from the patient who had gotten ill should be released within the next few days. We don't want to be around for that binary event just in case it was vaccine related. I don't think it is going to be vaccine related because Astrazeneca is currently developing 1 billion doses of this vaccine. If they suspected that there were some possible side effects, they would not have gone into production with this already. So I feel that we're probably buying back a spread that could be a a winner, but we're going to play it on the safe side. So let's take a look at what we've got this week. I'm going to go into the staged order entry screen, and I'm going to show you what I've got on deck. And these are all of our open positions. After tonight, you're going to see me remove Microsoft. You're going to see me remove Amazon. In fact, why don't I clean things up a little bit? I'm going to remove Microsoft, Amazon right there. That will be pulled out. And that'll make it a little easier for us to take a look at today's trades. So the first one that I have on deck, if you go down to the bottom, you'll be able to see it here. WKHS. We're going to be selling the September 18, $19 put, and we're going to be buying December 18th, $18 put. And because there's a dollar between the strike prices, we're going to be trying to get a 20-cent credit. So let's take a look at that stock and see why I like it so much. You probably already know why I like it so much, because I highlighted this Sunday evening and I'd already found it using custom search. Why don't I see if I can pop that search up, and I'll show you what I used tonight. Actually, we're going to go in and we're going to do this on our own. I'm going to click on custom search. This is how you find trades. And in the video from Sunday night, or Monday night actually, it was Labor Day, I had mentioned to you lots of great searches. Pop Bull is one of my favorite searches to use. Strong after earnings, another great one. Both are available in Option Stalker. So what do we want? We want good option liquidity. We all know that. So we're going to go with a value of 0. We could go higher if we wanted to. The idea with the custom search engine is you want to cast a wide net and then you want to draw it in. So you have fewer and fewer candidates to look at. The more boxes that you mark up here, the greater your probability of success, because that means that the stock is meeting more and more criteria. You're going to have fewer results, but the quality of those results is going to be higher. I want a stock that's got great relative strength. I'm going to mark the 5-minute and 15-minute relative strength. Then I'm going to jump up and mark some longer term boxes in here. So we have relative strength on a multitude of time frames. That is also very good. So we're going to click scan and we're going to see what we've got that comes up. You can see we've got a lot of stocks to actually choose from. Well, looky there. WKHS is one of the candidates, and that's how I found it. So I'm going to pull this off screen, and then we'll take a look at it. So we've got this upward sloping trend line right here that we can lean on. I'm going to click on GTC alert, and I'm going to mark that so that you can see it a little bit more clearly. So that comes into play right around the $18 level or so. I like the fact that the stock was able to get through this horizontal resistance right at that, call it 1950 level. You can see long green candles closing on their high. We also have the open here, which was 2118 roughly. That also is going to be a support level for us. That was resistance, now it's support. So we've got a couple of different levels that we can lean on. I'm going to put up the 1 OSI indicator, and then you'll be able to see, look at that relative strength. Just think about this intuitively. These were two horribly weak days in the market. This was Thursday, this was Thursday, and this was Friday. Look what the stock did. Between the 2 days, the stock actually almost recovered all of that price movement. And if I put the SPY overlay up, you'd see market down, 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 stock up, up, up. Well, we know what that means, relative strength. So this stock wants to go higher, period. Well, that plays well into our hand because we want to sell out of the money premium, and that gives us a very high probability of success when we have that type of strength. So what we're going to be doing is, I'd already mentioned to you that we're going to be selling the $19 put and buying the $18 put, and that puts us way in here inside of that breakout, which I also like. So let's go to the trade screen, and we're going to put in WKHS, and we'll wait for the option chain to load, and we're going to be going into the September 18th expiration. And we're going to be going down to the $19 puts, clicking on those, and then clicking on the $18 puts. You can see that this is 10-cent bid offered at 30 cents. There's $1 between the strike prices, so we have to put up $1 less the credit received is 80 cents. We're getting 20-cent credit for it. This spread will expire if we can get filled on it in a week and 2 days. And if it expires worthless and if we get filled, we will make a 25% return in a week and 2 days. Not too shabby. Let's recap this one. We're going to be selling the WKHS September 18th, $19 put. We're going to be buying the $18 put. We're doing that for a 20-cent credit. We're going to try Thursday and Friday, and we're going to cancel that order if we do not get filled. So that's the first stock that we're going to be taking a look at, the first option position, DKNG. There, we're actually going to be going out to the September 25th expiration, and I'm going to pull the option chain off, and we'll take a look at that stock first. And there you can see another one. Let's draw this upward sloping trend line right here. We can start there, or we can come into play right here. That also will work. So this particular stock, you can see how that's horizontal support right there around the let's call it 31.50 level, but that $33 level is of interest to me right there because that is the 100-day moving average. We have this horizontal support right here. Look at that relative strength. See the orange line above zero? This stock did pull back, but not very much. And as soon as the market recovered, it's right back up to where it was a week ago. If you look at what the S&P has done since then, it's nowhere near this relative high. So that visually tells me that this stock has relative strength. So our lines of support, we have that support line that comes through here horizontally. That's good. We've got horizontal support off of these lows right here. That's good. We have this upward sloping trend line. That's good. And then finally, we have the 100-day moving average, which it never even got close to. That's good. So we got lots of great things working in our favor. Lots of support level, great relative strength. So let's take a look at this trade and let's load her up. So we're going to go down to that $33 strike price. And we're going to click the bid there, go to the 32s. I'm going to click the ask there. And you can see that this spread is 15 cents bid offered at 30 cents. Well, because there's $1 between the strike prices, we're going to try and get a credit of 20 cents. So let's review the trade. DKNG. We are going to be selling the September 25. So here we're going out 2 weeks and 2 days. The $33 put, and we're buying the $32 put, and we're doing this for a credit of 20 cents. This order also will only be working Thursday and Friday. If you are not filled, cancel the order. Well, what about stops, Pete? Don't worry about stops. If we need to stop out of a position, I will send you an email just like I did last Thursday night with Microsoft. I gave you instructions on how to shut the trade down. So there's another one that we've got that we're going to try and enter. Final one I'm going to take a look at is ZM. So let's put that up. We'll bring up that option chain. We're going to be going out to the September 25 expiration, and I'll cue that up. We're going to be selling the September $320 puts, and we're going to be buying the 317.50s. And let's take a look at that trade real quick. First, we want to see what the stock is doing and why I like it. First of all, they had unbelievable earnings. Coronavirus is helping them. Businesses are doing remote conferencing. People are working from home. You've got schools using their product. So they have gone absolutely gangbuster. Well, if I take a look at that chart, you can see how that was the earnings announcement right there. And if I took a look at this chart at any other time, and I saw earnings after the close, and that's the reaction. And somebody told me, "Hey, Pete, here's the stock up at $400. You know, if you ever had a chance to buy this, actually 460 is where it got to. If you ever had a chance to buy this stock back on that earnings announcement at that price where it was just before it released, would you do it?" Heck yeah. When I see that kind of earnings reaction, absolutely. It must have been good and it was fantastic. So, what we're going to do is you can see the low from yesterday. We're going to come inside of that. This is a major support level, and you can see how that close was at $325. Well, we're going to be inside of that even down to the $320 level. And you can see that once the market recovered today, there's the price action from Friday. There's the price action from Tuesday. There's the price action from Thursday. So this is when the market decline started right here on this open, which is around $400. Look at the stock. It's almost back to that same price where the market opened on Thursday. That is strength. So we've got that working in our favor. We've got that support right in there. We've got that support right there, the low from yesterday. So we've got lots of good things that should support this stock. Let's go in and take a look at that trade. So again, we're going to be selling the ZM September 25, the $320 put, and we're going to be buying the September 25, $317.50 put. We've got $2.50 between the strike prices. So we want to be able to bring in a 50-cent credit on this. If we take $2.50 and we subtract out 50 cents, we know that we have to put up $2 in margin. If we make 50 cents on this trade divided by $2, we are going to make a 25% return. That's just the number that I like. By the way, if you're watching this video and you have a different approach, maybe you want to be even safer and you want to do a 317, 315, or you want to go farther out in time, adjust the trade to your liking. You can still use our guidelines when we're buying back these spreads and exit also. But if you'd rather take in less credit and go further out of the money, that's up to you. You absolutely can. I like to make a 25% return, especially when I've got stocks that have lots of upward momentum. It gives me more of a bullish bias to my trade, and it's more of a directional trade, but I'm trying to take advantage of that upward momentum, that relative strength, and I'm also trying to take advantage of major technical support levels that I believe will hold. All of those factors give us a very high probability of success on these. So that's the final trade that I'm looking to do. And I'm going to just bring this over and we'll show you that custom search again. And we'll go through a couple of other things. I'll show you a few other things that I was looking at. You know, today the market pulled back a little bit on the close. That's why I wanted to see strength versus the SPY. What did really well into the close? Now, you won't be able to do this if you are a option stalker member because you won't have these shorter time variables that you can use. But I would like to see, was there any stock that had really good strength into the close, really good heavy volume into the close, and perhaps a really nice positive ADX? And if I were doing this search, I would probably be looking for opportunities to day trade tomorrow morning. So let's take a look at what we've got just for interest's sake. And we're going to Lulu. Take a look at that one first. No, thank you. Down, down, down. Okay, so it had a little bounce on the close. That's how it was coming up on the particular search. And there's your little oversold bounce on this stock. Would I be wanting to buy it tomorrow morning or overnight? Heck no. Avoid that like the plague. That is a nasty drop, and that is probably going to be a good short. MO, it's stuck in the mud. There's nothing going on there either. Piton, that's pretty interesting. Look at this stock. Talk about relative strength. This stock is flirting with the all-time high after that market correction. It wants to go higher. You can see that nice big almost bullish hammer. So let's see what it did on the close. Not too bad. Market down, down, down on the close. Stock up, up, up. There you can see. That's what the SPY did. That's what the stock did. Yep. Day traders, I'd be watching Piton tomorrow on the open. That's a search that you can be using. All sorts of creative ways that you can come in, use these variables in here. Obviously, I love momentum. I love volume. I love relative strength. I love trade signals that are on a buy signal. I like them on multiple time frames. That's how you go in and use Option Stalker to find excellent trades. As far as swing trades, pop bull, fantastic. Look, DKNG right there. Take a look at TME. That one also looked pretty good to me as well. Look at how well that stock is held up right in here. Market down huge, stock holding up really well. Got this nice upward sloping trend line that comes in around the $15 level. On this one, you'd probably be able to sell a $15 put right in there, maybe a September 18th expiration, a week out. If I did a naked put right on something like this, I'd want to make sure that I'm getting somewhere in a 10% return. And there you can see there's not much there. There's only about a dime that you can get for that $15 put, 8 cents bid offered at 16. So not a lot of premium there for me, but a way that you can find a trade. Strong after earnings. You might think, oh gosh, earnings season is over. There's nothing that could possibly interest me in this list. Earnings pretty much continue after the bulk of earnings have gone through. You'd be surprised how many companies are announcing earnings all the time. Today, this is the pre-earnings options tab right here. Look at the number of companies that were announcing earnings today. ZS has been a pretty hot stock. GME has been. FCEL has been pretty hot. But that way, you can always be looking for companies that recently announced. Marvel had actually a nice run. I looked at this one. It was a consideration for tonight. You can see how it made a new relative high right here. You can see the earnings right there. You can also see that the stock didn't pull back very much, and it already is starting to rally. So pretty nice, pretty strong. I looked at the earnings report. I didn't like it. So I felt like their revenues were marginally good, but I just didn't see the strength, so I didn't want to be in this name. But the chart looks pretty good, and I think it could actually head higher. PVH was another nice one. There, I'm just choosing to stay away from apparel. You know, we've seen Lululemon. I just showed you that chart. I feel like with the coronavirus, people may not be spending like they would normally, but for all intents and purposes, stock very, very strong after announcing earnings, oblivious to what happened in the market. There's your earnings announcement right there. And oh, by the way, above the 200-day moving average. All nice criteria, all decent looking reasons to get into this stock. And here you can draw an upward sloping trend line on a GTC basis. We'll click on that. Click on that. You can see it extends to about the 54 level. You can see how we've got a nice horizontal support level right in here. It used to be resistance. Now it's support. That's probably at about $56. So you're 10 points out of the money. Are you going to be able to get much of a credit for it down that far from the current price of the stock? Probably not. So I'm not going to even take a look at it, but those are the types of metrics that you should use when you're looking to set up your trades. That's all I've got for you tonight. If you're watching this video on YouTube, please subscribe to the YouTube channel so that you never miss any of these videos. They'll have tons of great trading ideas in them, lots of education. Turn on your notifications. Members, let's make sure that we reel in that AZN trade tomorrow morning, Thursday morning, 50-cent debit. Try Thursday. If not filled, try Friday. I think we're going to be out of this with a scratch, and that's good. And we've got 4 really nice spreads on. 2 of them will expire Friday. So we've got some others that we're going to try and put on Thursday and Friday. We'll keep the ball rolling. I believe that the market has a little bit of upside for another few days. And then I think we're going to go down and test the low from this week. Once that dust settles, once I'm able to view that price action, then I'm going to know exactly what's in store for the market for probably the next month. And then we'll be able to get more aggressive with our swing trades. Who knows? Knock on wood. I might even consider buying some options. So thanks again. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.